Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey, let's talk about markets and stuff. So the S&P 500 had a bit of a consolidation day today. We did end up closing green as far as higher than where we closed on Friday, but we pulled back today and lost the hourly uptrend. Not surprising, looking for consolidation after such a strong end of last week. Hourly chart, we started this morning in a bit of a rising wedge, and a rising wedge is when you hit higher highs and don't get a whole lot of follow through. And it pretty much just shows bullish exhaustion. And that was the pattern that we were looking at as we headed into the morning. Pulled back first thing, and then we dropped to a new low of the day. Then we had a 15-minute equilibrium that broke bullish at the end of the day for a little bit of relief. But on the hourly time frame heading into tomorrow, I would consider anything under 298.91 just an hourly lower high. Bulls have to change the hourly trend back in their favor for a daily higher low to be set. I would say, just visually, roughly speaking, anything over 295 for a daily higher low keeps the bulls very strong. And if we were to pull back more than that, then that would be a little bit of a red flag as far as how much pullback that ends up being. So the financial sector was on fire today for the bulls, and the tech sector was weak. And that was pretty much the story of the day. And if you look at some individual financial sector names like JPM, they're just on absolute fire over the last few days. And if you've been watching these videos, you remember me saying within the last 2 weeks, have to see the financial sector change the daily trend if the S&P 500 can seriously be considering the all-time high. And we certainly did in a big way. We'll look at the financial sector in just a moment. IWM is trying to play catch-up. So IWM broke 151.91. The top of the August bounce initially is 152.63. Bulls need to break that level to try and play a laggard move to where the rest of the individual sectors stand. QQQ, the healthy consolidation, similar to SPY. I would say if the bulls can hold the gap fill of 188.49. If we don't pull back more than that, it will remain healthy, bullish consolidation. Anything above 185.03 is a daily higher low. Hourly trend has to change for the daily higher low to be established. And the end of the day move was just a bounce looking for an hourly lower high. Financial sector, there's our follow through. Just big time bull move. We're now looking up at limited resistance before our recent high. So I'm looking up at 28.42. Our hourly support level for XLF, anything above 27.70 is an hourly higher low. If we lose the hourly uptrend, just like SPY did today, we look for a daily higher low to form compared to 26.41. XLV, daily higher low is 89.71. Bulls are looking to keep that uptrend. It would be a red flag if we lose that uptrend from here, as we have not broken a lot of the resistances that have been established in August. So XLV is a laggard as far as the sector, not that bullish comparative to others, as is XBI. XLV at least has a daily higher low and higher high here. XBI still does not. XBI has to hold its recent low of 77.87 and break 80.86 to change this daily trend. Otherwise, the lower high, lower low pattern, which has been intact for a month at this point, will continue. And it's actually been over a month with just a very clear downtrend trying to change in the next couple of days. The VIX here didn't really get a whole lot of follow through as far as a bounce goes. Anything under 19, actually make that 21.20. Anything under 21.20 is a lower high on the daily, and that's just what we're going to be looking for. But the bounce today hardly even got any momentum going, as there was a sell-off into the end of the day as the S&P 500 saw a little bit of a bounce. So that's where we stand with markets overall. We're watching day by day. What does consolidation look like? Because every single day we get more information, and the statistical odds, or I should say the probabilities, shift as to what's the most likely. If we pull back and see increased bear volume tomorrow and a close at the low of the day, then that is going to be a completely different scenario than if we see a lower wick and bulls buying the dip and an hourly trend change before the end of the day. So every single day we get a whole bunch more information. Gold and precious metals continue to pull back significantly. We lost the daily uptrend in gold. Precious metals are not at risk of losing their weekly uptrend, but the bull miners already have lost it. So for gold, anything above 1400 is a weekly high or low. So this is still a very strong weekly chart. We have lost the daily uptrend. When we do turn around momentum and bounce, we will be looking for a lower high compared to 1556. 1492 is short-term support, and I'm watching the 4-hour trend because it's a very clear downtrend, keeping the bears in control at this point. Anything under 1515 is just a 4-hour lower high. So that's something we're keeping an eye on. Silver. So again, weekly consolidation on silver, still looking for a higher low. The daily time frame has pulled back significantly. We're building a base of support, trying to hold 1790. 4-hour time frame in a clear downtrend. Change the 4-hour trend, and we'll be looking for a bounce and just a daily lower high compared to 1963. But I'm starting to pay attention to the bull miners tomorrow for a potential bullish play. I did trade NUGT today for a small winner and could have held longer for bigger gains, but it was very volatile and I wanted to cut it while I had a small gain. Either way, the reason I'm interested in NUGT is it's just a straight dump. And the size of this pullback on that straight dump, almost 30%. So I'm not looking to be a hero and just, buy a bottom. I'm looking to see a bounce and a lower high form on the daily, just like we're looking for on these precious metals. So 4-hour RSI on NUGT is on the verge of oversold. And if we start weak tomorrow, or if we start tomorrow with a clear support level, the low of today as a potential bottom fishing play, that is what I'm going to be watching for. And again, 3251 was our weekly higher low. So we have lost the higher low pattern, which is definitely notable. So it all depends on where we stand pre-market. And that's going to change drastically what I plan on doing. But heading into tomorrow, I know that I will have interest in checking out the bull miners and where they stand first thing tomorrow morning. Oil bulls, significant follow through, another daily higher low and higher high. This is the highest price that oil has been in about 5 weeks. And after 58.14, 58.79 is the next clear resistance level. Anything on the daily chart above 54.81 will keep the bulls in control. And the question that we have, is this the weekly bull break that we've been waiting for? The original, I should say the shorter term, higher risk, higher reward signal is 57.43. 60.91 is the level that would really make bulls confident. But gush, which is bullish oil and natural gas, has been strong as natural gas has been on absolute fire. And oil being strong the last couple of days has helped that as well. So gush over the last 5 days has gone from 277 up to 402, a very nice 40% gain or so. Natural gas is just an absolute something that means big and strong. So natural gas is in a bit of a short squeeze, without a doubt. That's the only way that we're going this significantly from a weekly downtrend and just seeing an absolute catalyst of a move, 22% without daily consolidation. 4-hour uptrend, we're just looking for a higher low to form on any consolidation overnight because anything over 240 is a 4-hour higher low. It will be notable when we lose the 4-hour uptrend as well as the 4-hour 12-period exponential support. And that support, look how many times it's held. 1, 2, 3, 4, 5, 6, 7 times, and that's still in play the next time we consolidate. I'm very interested in natural gas bearish tomorrow. Again, it completely depends on the setup tomorrow morning. And that's why I wake up early. I'm on the computer at 6:30 in the morning, 3 hours before the bell rings, getting ready and checking in on everything. And I definitely don't sit here for 3 hours. I take a break before the bell rings. But the bottom line is it changes a lot. We're going to be trading with natural gas for hours before tomorrow morning rolls around. So I will see what the setup is at that point in time. All I know is I'm interested tomorrow in bullish miners and bearish natural gas, and we'll see where we stand 12 hours from now. Next resistance on natural gas is very limited. We got up over 260, so now we're looking at 2632. That's where we stand. I appreciate you checking in, and I'll see you all tomorrow. Have a good rest of your night.